Minority Depository Institution (MDI). MDI is a formal federal designation for banks and credit unions that are either owned or directed primarily by African Americans, Asian American, Hispanic American, or Native American. Under federal law, certain government agencies such as Federal Deposit Insurance Corporation (FDIC) are required to help preserve existing MDI and encourage the establishment of new ones. Minority depository institutions are defined by the federal government as banks and other financial institutions that are either owned or directed primarily by members of certain minority groups. Those minority groups are African American, Asian American, Hispanic American, and Native American. The Federal Deposit Insurance Corporation, National Credit Union Administration, and several other regulatory agencies are responsible for helping MDI succeed and encouraging the creation of new ones. What is depository? The FDIC defined a minority depository institution (MDI) as a federal insured depository institution for which 51% or more of the voting stock is owned by the minority individuals, or a majority of the board of directors is minority and the community that the institution serves is predominantly minority. It adds that ownership must be by U.S. citizen or permanent legal U.S. resident to be counted in determining minority ownership. As of December 31, 2021, the FDIC counted 143 MDI across the United States and its territories with collective assets of more than $325 billion. The minority status of those 143 financial institutions broke down as follows: Black or African American, 19; Hispanic American, 31; Asian or Pacific Islander American, 73; Native American or Alaskan Native American, 18; Multiracial American, 26. The majority of MDI banks are regulated by the FDIC, although some are regulated by the Office of the Comptroller of the Currency (OCC) or the Federal Reserve. In addition to the institution tracked by the FDIC, the National Credit Union Administration counted 518 MDI credit unions as of December 20, 2021, with collective assets of more than $59 billion. The NCUA is the federal agency that insures credit union deposits and works to maintain their financial health, much as FDIC does for banks. Minority depository institutions serve their communities by making a greater percentage of their home mortgage and small business loan to minority and low-income borrowers than other financial institutions do. Benefit of minority depository institution. Part of the rationale for supporting minority depository institutions, as the FDIC Office of the Inspector General explained in September 2019 report, is that they play a vital role in assisting minority and underserved communities and resources to foster the economic viability on these communities. As evidence that a 2019 FDIC study entitled Minority Depository Institution: Structure, Performance, and Social Impact found that MDI originated a greater share of their home mortgage for minority borrowers and those living in low and moderate income census tracts compared with non-MDI financial institutions. They also originated a greater share of Small Business Administration guaranteed small business loan for such borrowers compared with non-MDI financial institutions. Financial institutions that qualify for MDI status become eligible for a wide range of training and educational programs, as well as technical assistance in such areas as compliance management, funding and liquidity, and information technology risk management or cybersecurity. FDIC and other agencies also provide technical assistance to groups interested in launching new MDI and applying for federal deposit insurance coverage. History of minority depository institution. While banks started and owned by members of minority groups have a long history in the United States, Congress formalized the term minority depository institution as part of the Financial Institution Reform, Recovery, and Enforcement Act of 1989. Thank you.